What up, mga Askals sa Merkado? Happy New Year! It's a brand new fiscal year of trading for us, old and new, so I made this extra special serve on hot plate. Today I will present to you a very simple and easy to remember trading psychology. Since it's a new year, we start our approach with the right mindset and psychology. So without further ado, let me introduce you to our trading or traffic light trading and psychology. Now, as traders, we are bound by rules. The rules that we impose on ourselves, and that is called trading plan. This is our rules and guidelines when we trade in any financial market. So if you don't have one, then that may be your missing ingredient to be consistent in your trade. Now let me briefly describe this psychology, and I assume all of us knows how to drive, or how to drive a vehicle. Well, if not, I'm sure you know what a traffic light is. So when you see a traffic light, you know when to stop, slow down, and go. Simple, yet always violated. Why? Because most of us don't stick to the rules. We beat the red light, we don't slow down. In fact, we push the pedal to the metal just to go ahead and cross the road. And at times we are not attentive, and it takes us a while before we move and go. Now, why am I talking about this? Well, it's the same thing with trading. We violate the rules we set, or worse, we have none. Majority of traders use emotions, which is a dangerous affair. So don't feel bad. Don't feel bad if you're still at this point. It's a learning process, and we all have our own fair share. Now, the traffic light rule: when you drive, when you see the green light, it tells you to go. And when you see the yellow, it's signaling you to slow down. Caution, slow down. And when you see the red light, of course you stop. So there's no emotion involved, because you know exactly what the rule is, and you follow that, and you avoid accidents. That's the same thing in trading. Now when trading, you know when to go, when to slow down or reassess or stop trading. You have that concept. No emotion, just bam, go, stop, or slow down, or be cautious, proceed with caution. So that's how trading works. Now let me give you common behavior traders do, or common behavior of traders without a trading plan. So traders, majority of traders have this behavior, wait and see behavior. They tend to procrastinate in their approach. They wait and see what the market will do, which is absolutely random, especially if you don't have any plan. Now, for example, let's make this as an example. So a trader sees a bullish rally, and then the trader would say, "What lang sa tab, basin mo ubos pa ang presyo." Remember, we're on a bullish rally. So what lang sa tab, basin mo ubos pa ang presyo. Or let's just wait. Maybe the price would pull back. We're gonna catch it. They're waiting to catch it. All right. And then here comes that this trader who doesn't have any plan or any entry price at all, sees the price action the next following days, that it's still continuing to move up, it's still rallying. So the next days it's still bullish, Now this trader becomes impulsive. So this traders now will say, palit na ta kay basin mabiyaan ta sa bull run. So well, let's buy this now so that we will be able to ride the bull run. So traders are panic buying. Some listen to gurus, to buy this and that without any idea about the condition of the stock. Now it so happened that the stock is exhausted by the time that trader came in or bought positions or take positions, and it's already overbought. But since you are in a panic buying mode, or gurus tell you to buy stocks, then the stock fell sharply. So now the trader becomes defensive in behavior. They will now justify their action and in a state of denial. Musakap lagi ni. And their stocks is already falling down. Musakap lagi ni. This stock will still rise. I know it will rise, definitely, because so and so he's told me so. He's reliable. This person's reliable. The system I'm following is reliable. But then again, it's falling down sharply. Now what happens next is that the trader becomes hypercritical. This trader will now know all the languages of bullshit. Mamalikas na siya from A to Z. So mo ay nila ask kamaning stocks sayo man tong gitudlo ni kuan, walay ayo ning strategy yung gitudlo. So the trader is now, you know, blaming the system they're following, the institution, or even the people, because they're trying to project others at their own fault. So they're looking for someone to blame. So it becomes hypercritical. All of these are based on emotion, which should not be the case. So what should you do if in case you find yourself in this situation? Or for the new ones who are watching this, if you're new to my YouTube channel, what should you do, especially if you're starting? Plan your trade. Before you do anything, plan your trade. I'm pretty much sure you have systems already. You've learned something. You already have ideas on how to trade. But the approach is the sequence of how you trade it, how you would execute your trade. Planning. You do that by planning your trade. Alright, so like a traffic light, your go signal is to know when to enter and exit your trade, because we need to extract emotion out of your plan. So with your system or with your strategies, those who you've learned, you know already what the buying signal is. For some indicators, it's telling you to buy, and you have confirmation and whatnot. So you know when to enter. You have a price to enter, and you also have an exit trade where you should exit your position. So you have that target price, and this this already gives you an idea or a direction where you are going. So that's your go signal. And of course, when you already have your entry price and exit price, you proceed with caution. You now create a buffer or margin of error where you allow yourself to take a loss in case price action moves against you. So this is what you call your stop loss. You're accepting the fact that you win some, you lose some. There will always be a losing end. So you give yourself a buffer, a margin of error, if in case price action moves against you. That's just paper loss. compared to a huge loss if you don't have this. Paper loss, you can recover that. So you have that. So when price action moves at that certain price, you go ahead and take that loss. Then lastly, your red signal or your stop signal. Oops, sorry, wrong red light. Okay, now I got your attention. If you hit your target, price, then take it. Close your trade immediately. Alright, again, if you hit your target price, then take it. Close your trade immediately. Alright, again, it's your traffic rule. Now, if you don't stop at the red light, that's where accidents happen. You beat the red light by saying, "Pusaka pa ni, the price could still go up. I could still ride this. We're on a bull run." If the price, if your trading plan is coming your way, it's following your plan, and it's actually hitting your target, and now you wanted to ride and get more. So now you're already violating the traffic light rule, and you're starting the cycle with the wait and see behavior, and everything follows. You now become greedy, and you pay the price through the gains you've already harnessed. So the cycle starts over in reverse at a shorter version. So you go back to wait and see, because of course you've already hit your target, and then you want to wait and see if price action would still move up. You could still get more buck out of it. As soon as price action moves your way, you would then say, "What lang sa ta, basin musaka pa ni presyo, layo basin layo patag gain." Right? And as you know, stock market, no one can actually predict what would happen next. But majority of the cases is that if you see your account is already gaining, and then you're becoming greedy about it, and you ignore all the signs of your plan, and as soon enough price action reverse drastically, then what happens next is you become impulsive. Sell na ako niya akong position kaya hapit na sa entry price. So what happened is a drastic fall of the price, because remember, when exhaustion happens, or if selling pressure is now on the rise, you would see a stiff pullback of stocks. If you haven't seen that, or if you experienced that, good. So at least you have a picture, a great picture of what happened to you back then. Sell na ako ni, hapit naman entry price, at least napakoy gamay. So you've taken the loss, you've sacrificed all the gains you supposedly get. Alright, and then now you go, because this is a shorter version, trader becomes hypocritical, and then this time they now blame themselves. They're blaming themselves for not following their plan in a state of guilt. So you're already guilty. Ingon bitaw ko iyaw nag-agto. Agto jud na tanawa. I told you not to go to, but you go to. Now look at na tiaw mo na. So that happens. The trader blames himself not following his own rule. So you violated your traffic rule. So that's the psychology of it. You eliminate the emotions. You follow your rule. By the time you reach your target, take it. When you get your target, when you hit your target, that's already gains. Regardless if it's still gonna go up or whatnot, you could still see any other opportunities. All right. So I can't stress enough: plan your trade, trade your plan. Plan your trade. You plan your trade before you engage, or before you even enter. You plan that trade and then trade your plan. Follow that. After that, go out, stop, go, proceed with caution, then stop. Okay, so just to recap: go signal, know when to enter and exit your trade, create a buffer of margin for your errors. This is your stop loss, and then close your trade immediately. Close your trade as soon as you get your target. If you see the price action or is already shifting before your target price is hit, of course there's a calculation for that. If you have that strategy to calculate, then follow that. This is just a general rule. You follow by following. We're talking about the psychology. So follow. Hi baby. Follow your rule. My daughter just woke up. So yeah, hopefully guys, hopefully you like this video and help you in your trading approach for this year. Don't forget to hit that subscribe button and share, and see you on our next video.